Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Monday, August 28th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we delve into India's global ambitions for cryptocurrency. We analyze the sinking ship that is FriendTech and what it means for the crypto community. Ever heard of BitBoy Crypto? Well, the man behind it is stepping down amid controversies. OnlyFans takes a massive Ethereum hit, but their profits are still soaring. In the DeFi sector, Balancer gets hit with a $900,000 exploit. And last but not least, we'll explore how Oman and Laos are taking two divergent paths in the world of crypto mining. Indian Prime Minister Narendra Modi has called for a global framework on cryptocurrencies. This happened at the G20 summit. India currently holds the G20 presidency. Modi emphasized a unified approach. He said rules should not belong to just one country. He drew parallels with the aviation industry. Now, India has been advocating for this despite its unclear crypto regulations. The country imposed a 30% tax on crypto gains in 2022. This led to a decline in crypto trading in India. Modi also talked about the broader macroeconomic implications of crypto. He mentioned that the G20 had reached a consensus on crypto matters. India aims to include the African Union in the G20 crypto talks. The G20 summit will take place on September 9th and 10th. India's crypto revenues are expected to reach $3 billion in 2027. Modi's call for a global framework was also echoed at a recent gathering of BRICS nations. Modi's call is a significant move. It shows India's growing influence in shaping global crypto policies. Now, this is crucial. Why? Because India itself has been a battleground for crypto regulations. The 30% tax imposed earlier this year led to a decline in crypto activities. Yet, Modi is pushing for a unified global approach. That's a strategic move. But let's not forget the timing of this. India holds the G20 presidency. That gives it a unique position to steer global crypto talks. Modi's emphasis on including the African Union is also noteworthy. It shows India's intent to make the G20 more inclusive. That could be a game changer. It could bring more nations into the crypto fold. The G20's consensus on crypto matters is a big deal. It shows that world leaders are taking crypto seriously. They're moving beyond the financial stability talks. They're looking at the broader economic impact. And that's a shift. It could lead to more balanced crypto regulations globally. So what does this mean for us? Well, it's kind of a mixed bag. On the one hand, a global framework could bring clarity. On the other, it could lead to stricter regulations. Either way, the crypto world should keep a close eye on India. It's becoming a key player in shaping the future of global crypto regulations. Where India seeks unity, FriendTech faces disunity. The warning signs were there. Transitioning from nations to networks, let's dive into what happens when you neglect due diligence. Don't forget to follow us for more insights. FriendTech is a decentralized social network, at least for now. That may not be true much longer because FriendTech has seen a sharp decline in key metrics. Launched just over 2 weeks ago, the platform's daily fees have dropped 87% from $1.7 million to $215,000. Daily trading volume has slumped 94% from its peak of $16.9 million. The number of daily traders has declined 83% from 35,000 to 6,000. Network fees have also slumped from $1.7 million to $95,000. The platform allows users to buy and sell keys linked to X accounts, offering access to chat rooms right in the app. FriendTech had initially gained attention for its rapid growth, but now faces criticism for its decline. FriendTech, which once dominated crypto headlines, has fizzled out in a matter of weeks. One of the major culprits behind this decline appears to be automated trading bots. These bots have been manipulating the order of transactions, discouraging content creators and users alike. The decline also casts a shadow over Coinbase's Layer 2 network Base, which had seen a surge in activity due to FriendTech. Critics have labeled the platform as dead, citing greed and poor execution as the primary reasons. The platform's decline has been so significant, it's even outshined established players like Uniswap in the Bitcoin network in its downfall. The rapid decline of FriendTech raises questions about the sustainability of such decentralized platforms. It also serves as a stark reminder of the volatility and unpredictability inherent in the crypto space. The platform's failure to sustain its initial success could be a sign of things to come for other decentralized social networks. It's a lesson in the risks and challenges that come with the rapid growth in the volatile world of cryptocurrencies. And that lesson might just be, the network effect is everything. After FriendTech's fall from grace, it's worth noting that even influencers aren't immune to the crypto chaos. Ben Armstrong, aka BitBoy, is finding that out the hard way. If you're enjoying these analyses, be sure to hit that subscribe button for more. Ben Armstrong, once the face of BitBoy Crypto, has been removed from the brand, right down to removing his picture from the BitBoy Crypto X account. The decision was made by BJ Investment Holdings and its parent company, Hit Network. Financial damage and substance abuse were cited as the reasons for his removal. Armstrong had been the frontman for BitBoy Crypto, a brand with 1.45 million YouTube subscribers. The news was confirmed by crypto influencer Wendy O, who herself has 194,000 subscribers. Armstrong confirmed an internal power struggle within his company. He claimed that TJ Shield and Justin Williams had attempted a coup, but reassured that he was not in danger of losing control over the brand. Armstrong has been involved in several controversies, including a failed meme coin venture and legal issues. He was allegedly facing an arrest warrant for failing to show up in court over harassment allegations. The departure of Ben Armstrong from BitBoy Crypto is a seismic shift in the crypto influencer landscape. Armstrong wasn't just a host, he was the face of BitBoy Crypto. His removal raises questions about the brand's internal governance and decision-making. The cited reasons for his firing, financial damage and substance abuse, makes this more than just a personnel change. It's a statement on how the crypto industry handles controversies and legal issues. Armstrong's exit exposes the fragility of influencer-led crypto brands. When the face of the brand is removed, what happens to the brand itself? The BitBoy community, with its 1.45 million subscribers, is left in a state of uncertainty. Armstrong's own confirmation of an internal power struggle adds another layer of complexity. It's not just about him, it's about the brand's future and the power dynamics at play. This isn't just one story of one man's fall from grace. It's a cautionary tale for the crypto community at large. Armstrong's controversies, from meme coin ventures to legal issues, serve as an example of the risks involved in the crypto influencer space. His removal is a wake-up call for the industry to tread carefully in a landscape fraught with legal and ethical landmines. And all news analysis aside, Armstrong is a father, he's a husband, and for the sake of his wife and his kids, if nothing else, I hope he's able to get the help that he needs. And those are the perils and pitfalls of crypto influencers as seen through the lens of BitBoy's exit. But what about mainstream companies? OnlyFans made a big bet on Ethereum and learned a costly lesson. Before we jump in, hit that notification bell for daily updates. OnlyFans' parent company, Phoenix International, invested almost $20 million in Ethereum between 2021 and 2022. This investment was part of their working capital. However, due to the bear market, the value of this investment dropped by over 42%, amounting to $11.4 million by November 2022. The company reported an impairment loss of $8.46 million. Despite this, OnlyFans saw a 16.6% growth last year, with a 47% increase in the total number of creators and a 27% increase in subscribers. The platform had revenues of over $1 billion for the first time and reported $1.1 billion in sales for the year. Pre-tax profits jumped to $525 million. It's clear that even mainstream companies like OnlyFans are willing to take the crypto plunge, signaling a broader acceptance of digital assets. But it's not all sunshine and rainbows. The bear market hit them hard, and they suffered a significant loss. This serves as a cautionary tale for companies thinking about diversifying into crypto. Now let's talk about the timing. OnlyFans decided to disclose this information amid a bear market. Why? Could be a strategic move to re-enter the crypto space, especially given their growth last year. They're not new to crypto. They allowed verified content creators to change their profile photos to verified Ethereum NFTs as of February 2022. So, is this a desperate move or a calculated risk? Given the volatile nature of cryptocurrencies, it's a bit of both. But one thing is certain, OnlyFans is willing to gamble in the crypto market, and they're not alone. Companies like MicroStrategy, SpaceX, and Tesla have also made significant crypto investments. In my estimation, OnlyFans' investment in Ethereum is a double-edged sword. It shows the growing acceptance of crypto, but also highlights the risks involved. It's a move that could either set them ahead in the game or serve as a lesson for others. Either way, it's a significant moment in the ongoing relationship between mainstream companies and cryptocurrency. OnlyFans and Ethereum. That's an interesting pair for sure. But now let's turn our attention to the very real heist. Balancer's security lapse cost them $900,000. Do you like what you hear? Make sure to like and share for more. Balancer is a decentralized finance protocol on Ethereum. They recently suffered a significant exploit. The attack came just days after Balancer disclosed a vulnerability affecting its boosted pools. The protocol confirmed the loss of nearly $900,000 on social media. Blockchain security experts identified an Ethereum address linked to the attacker. This address received 2 large transfers of DAI stablecoin, totaling $636,812 and $257,527, amassing over $893,978 in the attacker's possession. The protocol's team acknowledged the exploit and took immediate action. They'd already implemented mitigation measures but couldn't stop the affected pools. They urged users to withdraw from these pools to prevent further losses. Initially, only 1.4% of Balancer's total assets, or over $5 million, were at risk. However, by August 24th, at least 2.8 million remained vulnerable. The platform had issued a warning, advising users to migrate to safer pools or withdraw their funds. Now let's dig a bit deeper. Balancer's team may have acted promptly, but the damage was already done. The inability to pause affected pools, even after knowing about the vulnerability, is a significant oversight. It raises questions about the effectiveness of their mitigation strategies. The attacker was able to exploit the vulnerability and move a substantial amount of money, highlighting the urgent need for more robust security measures and DeFi protocols. This incident serves as a sharp lesson for users and liquidity providers. Always be vigilant and do your due diligence before investing in any pools, especially those labeled as at risk. This exploit shows the limitations of current DeFi security measures. It's a wake-up call for the entire DeFi ecosystem to tighten security protocols. Balancer's exploit isn't just a loss for the protocol, but a dent in the trust that users play in decentralized systems. And in a space that's already rife with skepticism about centralized financial systems, such incidents only fuel more distrust. Balancer will have to work hard to regain user trust, but the implications for the broader DeFi space are far more severe. From a security failure to global mining ambitions, the crypto landscape is nothing if not diverse. Oman and Laos offer us 2 sides of the same coin. Remember to subscribe for more cutting-edge analysis. Oman is investing heavily in crypto mining. They've partnered with Abu Dhabi's Phoenix Group for a $300 million, 150-megawatt mining facility. This is part of an $800 million strategy to become a digital hub. The facility will be operational next year. Oman's investments are under scrutiny for Sharia compliance. Islamic scholars are divided on whether crypto is halal or haram. Laos, on the other hand, is pulling back from crypto mining. Electricité du Laos has stopped supplying power to domestic mining operations. This is due to an energy crisis worsened by the drought. Laos had initially encouraged crypto mining. They even had regulations requiring a $5 million security deposit with the Bank of Laos. Now, they've halted new mining applications. The country relies on hydropower for 95% of its electricity, so a drought would hit the energy production very hard indeed. Oman and Laos present 2 contrasting approaches to crypto mining. Oman is bullish, investing millions to become a digital hub. They're even willing to navigate complex religious debates around Sharia law. This could make Oman a key player in the crypto world. But the Sharia compliance issue is a ticking time bomb. It could either legitimize or delegitimize the entire operation. Laos, however, is something of a warning. Their initial enthusiasm for crypto mining has been dampened by real-world challenges. Drought conditions and an energy crisis forced them to reconsider. This shows the vulnerability of crypto to environmental factors. It also raises questions about the sustainability of crypto mining in countries with unstable power grids. Both nations highlight the high-stakes gamble of crypto mining. Oman's investments could pay off or backfire spectacularly. Laos' situation is a wake-up call for countries jumping on the crypto bandwagon without adequate infrastructure. It's a complex landscape, and the stakes could not be higher. So, what happened? First off, Indian Prime Minister Narendra Modi calls for a global framework on crypto at the G20 summit. While India has its own uncertain stance on crypto, Modi pushes for an inclusive and unified approach, adding another layer to the complex tapestry of global crypto regulations. Then, FriendTech's flash-in-the-pan success comes crashing down. A sharp decline in daily fees, trading volume, and user activity paints a grim picture. Automated trading bots and greed are the suspects, and it's a lesson on the volatility of decentralized platforms. BitBoy Crypto loses its face. Ben Armstrong exits amidst legal troubles and internal conflicts. From meme coin controversies to legal battles, Armstrong's departure serves as a multi-layered warning for the crypto community. OnlyFans' venture into Ethereum takes a hit. Despite a bear market wiping out 42% of their investment, the platform shows resilience with remarkable growth in other areas. A lesson for mainstream companies flirting with crypto investments: high risk, high reward. Balancer's 900,000 heist is next. An exploit in their DeFi protocols results in a significant loss, highlighting the pressing need for robust security measures. It's a wake-up call for the whole DeFi ecosystem and a dent in the trust users play in decentralized systems. Finally, Oman and Laos give us contrasting views on crypto mining. While Oman goes all in, even navigating complex religious debates, Laos pulls back due to environmental constraints. It's a high-stakes gamble, and the outcomes could not be more different. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.